Hey traders, Raghi here. As we're dealing with this caution day, post-caution day environment, Friday's a caution day as well, half day. Let's talk about what caution days are. Caution days are days where we know there will be attention placed elsewhere. Think the way in which a market gears up for a Fed meetings, Fed speech, etc. Think about the way the market might gear up for an options expiration, non-farm payroll. We also know that holidays are going to affect volume and attention, and therefore they're going to affect the way in which the higher probability, the expected higher probability of our setups will also behave, hence a caution day. And so oftentimes what I'll do is I'll day trade using options instead of the underlying futures contract, trade fewer futures. For some traders, they might look at micro. For others, they just simply take the day off. But one thing is for sure is weeks like this allow us to really fine tune our watch list. And that's really been the focus of my week. And I think the one thing that really does stand out is, despite the fact that we are seeing higher highs in the S&P and the Dow and the NASDAQ and the Russell, the NASDAQ is still lagging behind in terms of turning into a double green market. So I'd be a little bit more cautious on the NAS and continue to focus on the XLC, the SMH, and double green stocks within the NAS. One other ETF that we've been looking at a little bit more often is ARK, where the number one weighted stock is Tesla. Tesla is a stock that is important to futures traders now. The inclusion within the S&P, the weighting within the NASDAQ, it's increasingly going to be an influential stock now to futures traders because of its weighting. So those are things that I think both futures traders and ETF options traders are going to want to be aware of. Trading SPY, QQQ, DIA, IWM on caution days are all really good choices. And then, I'm going to wrap this up with a quick discussion on gold, because that's probably still the number one question that I'm getting. Gang, gold is double red. Don't go pick a bottom here. It makes no sense to do that. It makes no sense to try to pick a bottom in gold. At some point in the future, would I like to be long gold? Probably closer to 1750, and even this area down to 1700. As different layers of support break, whether that was 1850, whether that's 1800, etc., I'm going to look for where the market A gets to the price level and B either gives me an inside day or minor low pattern. And then I'll look at GLD calls for the February expiration. But, let's talk about metals. Is there another metal with far better clarity to the upside? Copper. Copper's been a terrific play. It's been following through. We've been talking about getting long copper for some time. So rather than try to pick a bottom in gold right now, which has been difficult and irritating, why deal with an irksome market where you're trying to pick a bottom? Instead, look for where the structure is good and buy on the pullbacks. Eventually we'll have a low in gold, and eventually I'll have a setup, but not yet. So please don't let markets like this distract you from markets like this, okay? That's today's free video. I'll see y'all in the next update.